I would say that Bitcoin fixes everything. And so if we think about what that means, Bitcoin fixes everything, and we need to be prepared for Bitcoin to infuse everything. You're an individual, and so you believe being a sovereign individual, so you buy Bitcoin and you hold your own keys. Okay, good.
Hey guys, welcome back to Everyday Finance. In this video, Michael Saylor discuss about Bitcoin. According to Michael Saylor, the industry has become more vocal, the regulators should act, and the government should act appropriately. And after that, acceptance of Bitcoin and public knowledge of its worth have only grown, not declined. Michael Saylor believed that there are strong forces at work in this situation action. And the query is, which course of action is the least likely to occur? There's a lot of things that need to be resistant in order for that energy to manifest people would prefer. But you are well aware of the general agreement, Michael Saylor say. If we were to ask 100 members of the cryptocurrency community to vote, would they be in favor? Giving a Bitcoin spot ETF a score of 99 out of 100, indicating that it makes sense, yes. Therefore, the item with the greatest degree of consensus, that is the least contentious, is it appears Michael Saylor believed there's one more thing. Continuing to deny it seems arbitrary when an ETF with a futures basis is being traded on a futures market data. A year ago, you could have a technical argument that you are aware that the futures are decent enough and that they trade on the CME. You may have argued that our surveillance agreement with the CME is superior, and that it is sufficient the fact that Bitcoin is up this year compared to last year is the difference between the 75%, while the futures ETFs have increased by 45%, and lots of things Michael Saylor discuss. So please watch the video to end, and like, share, subscribe our channel Everyday Finance, thanks.
Well, first of all, there's broad-based demand everywhere in the world. Right? Everybody wants to buy Bitcoin, but they want to buy Bitcoin through their existing money manager or financial manager or bank. And that means pick up the phone, buy $10 million worth of it or $10,000 worth of it in 30 seconds. So there's demand at the retail level and there's demand at the institutional level. And in order to meet that demand in size, people need a security like that travels on the conventional Wall Street rails, right? We've talked about it. It's just like everybody wants a house, but if everybody has to work for 30 years, save cash, and then at the end of their career, take the cash to the bank to buy the house, demand for housing would be 5% of what it is right now. So there's broad-based demand, and that's building. The second is there's massive political pressure from everybody. The industry has brought a huge amount of pressure on the regulators and huge amount of pressure on the political system. We see a massive amount of political pressure coming from the House Financial Services Committee, and the pressure is to do something. We're approaching an election year, and it's in the best interest of both parties to be constructive and to do something that's progressive for the voters. And, there really isn't a constituency that doesn't like Bitcoin, right? You're either ignorant of it and you don't know anything about it, or you're extremely pro-Bitcoin. So politically, it's very advantageous to do something pro-Bitcoin here on the Republican side and on the Democratic side. And it's the least controversial, most constructive thing that can be done. And what you have is just a large amount of pressure in the industry and in the media and in the political system to do something. And you have now Wall Street firms, BlackRock and Fidelity, lining up again. So that's why you would say it's 65% likely. I think the other thing that's driving it is the awareness that simply relying on the litigation or the legal system to resolve ambiguities is not optimal. right? If you want to solve the problem with litigation, it's going to take 5 to 10 years. It's going to cost $100 million an issue, and you're going to get a Delphic answer, which is ambiguous at the end of the time period that covers 10% of the scope. So the industry knows that that litigation is not going to solve the problem. I think politicians realize litigation will not solve the problem. Even the regulators are starting to realize that enforcement and litigation is not going to solve this problem.
According to Michael Saylor, there is a huge demand for Bitcoin everywhere in the world right now. Everyone wants to purchase Bitcoin, but they wish to purchase Bitcoin via their bank, financial manager, or current money manager. Choose pick up the phone purchase it for $10 million or $10,000 in 30 seconds. So there's demand exists at both the institutional and retail levels. And in order to satisfy those demands, people of size require security, similar to that seen on traditional Wall Street rails, right? We've discussed this. It seems like everyone aspires to own a home, but if everyone must labor for 30 years, save money, and then take that money to the bank at the end of their employment to purchase the housing, as you are aware, would only account for 5% of the current housing demand. Therefore, there is a large base of demand that is growing, and there is also tremendous political pressure from all of the industry's stakeholders, brought enormous pressure to bear on the political system and authorities, as well as a significant political pressure that is being used by the House Financial Services Committee, and there is urgency to act because an election year is quickly approaching. Additionally, it is in both parties' best interest to be cooperative and to take a progressive action for the voters. And, not many people can honestly say they don't like Bitcoin. Let's back to the Michael Saylor interview.
So that means there's just there's a lot of pressure on two groups. There's pressure on the regulators to put forward some constructive path, clear rules or constructive path forward for this innovation to manifest itself. And then there's pressure on the politicians to put forth constructive legislation to allow people a path forward. And that pressure has been building. I think probably just immediately in the aftermath of FTX, people were shell-shocked, right? But if you look at every month since then, right, the sentiment is the regulators ought to do something, the politicians ought to do something, right? And the industry's gotten louder. And then support for Bitcoin and awareness of the value of Bitcoin has only increased and not decreased. So I think that all of the forces at play here are compelling action. And the question is, what's the most likely action or the path of least resistance for that energy to manifest itself in? And there's a lot of things people would like, but by far, the universal consensus, if you were to take a vote of 100 people in the crypto industry and say, are you in favor of a Bitcoin spot ETF? You would get 99 out of 100 saying, of course, why not? Right? So it's the one thing that is least controversial, that has the most consensus. And it looks, I think there's one more factor. It looks capricious to keep denying it when there is a futures-based ETF that is currently trading on futures data. And a year ago, you might have made the argument that a technical argument, well, the futures is good enough and it trades on the CME and it's good enough. And we like our surveillance agreement with the CME better. You could have made that argument. The difference between today and a year ago is that this year, Bitcoin is up 75% and the futures ETFs are up 45%. So this year, what's happened is the futures have disconnected with the underlying index. So futures ETFs aren't really tracking Bitcoin right now. In fact, they're kind of destroying in the range of 10 to 20% of your capital a year. So that being the case, you can't, it's clear to any quantitative analyst or investor that futures ETFs don't provide an on-ramp for a reasonable investor without serious wealth destruction. And so you wouldn't, I couldn't in good conscience recommend that you use a futures ETF when I know it's going to cost you 10 to 20% of your capital every year for no reason, other than the fact that the futures market isn't, the strategy of using futures isn't an effective way to track the spot Bitcoin price. It just isn't working. So there you go. You've got one idea not working. You've got another idea that should work. You've got massive demand. You've got massive pressure to do it. And at some point that pressure's got to find a release valve. I would say that Bitcoin fixes everything. And so if we think about what that means, Bitcoin fixes everything, and we need to be prepared for Bitcoin to infuse everything. You're an individual. And so you believe being a sovereign individual, so you buy Bitcoin and you hold your own keys. Okay, good. Now you get married, and now there's two of you, and one of you doesn't want to do the work, so the other one takes responsibility, and so now one of the two of you in the marriage holds the keys.
Michael Saylor believed the best approach to conceptualize it is that Bitcoin will serve as a foundational layer. And in order to move things quickly, Layer 2s like Lightning will exist, but Layer 3s that are custodial, similar to the Cash App, Coinbase, and Fidelity, similar to JP Morgan, Bank of America, Apple, and Google. They're going to be custodial Layer 3s, and they will either be there to offer features such as, would it be desirable for 1 billion users of Apple iPhones to have instantaneous access to move Bitcoin from the iPhone, utilizing there will likely be technical justifications for believing Apple iOS. Therefore, there will be political considerations for a third party, such as the fact that the mayor of New York is the mayor of New York, and we appointed someone to oversee it. So that in the event that New York wishes to hold Bitcoin, if you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.